Counting down 5, 4, 3, 2, 1. Good morning, everyone, and welcome to the Q3 media briefing for Scotia Group Jamaica Limited. I'm Yannick Forbes Patrick, Vice President of Communications. Thank you so much for joining us this morning. Please allow me to introduce our panel for this morning. From left to right, we have Maurice Nelson, our Senior Vice President for Corporate and Commercial Banking. Deborah Lopez Spence, President of Scotia Jamaica Life Insurance Company. Adrian Reynolds, Vice President Treasury. Perrin Gale, Executive Vice President Retail and Small Business Banking. Audrey Tugwell Henry, President and CEO. Gabrielle O'Connor, Chief Financial Officer. Sabrina Cooper, Senior Vice President of Wealth and Investments. And Gary Von White, Senior Vice President of Collateral Protection. So this morning, we will begin with brief remarks from our CEO. Then we're doing things a little bit differently, and we will have brief remarks from all of our panelists and then open up for questions. So handing over to you, Madam President.
Thank you, Yannick. Good morning, everyone. Thank you all for joining us. It is always a pleasure for us to come together to discuss the performance and impact of Scotia Group. So today, Scotia Group is very pleased to report net income of $14 billion for the 9 months ended July 31st, 2024. This net income represents an increase of $1.4 billion or 11.4% over the comparative period last year. In keeping with our consistent reputation and our actions of always paying a dividend, our board of directors approved a dividend of 45 cents per stock unit in respect of the third quarter ending July 31st, 2024. This payment will be made on September 20 for all stockholders on record as of September 26, 2024. Ladies and gentlemen, we continue to be very pleased with the strength of our balance sheet. Of note, our asset base grew by $49 billion or 7.6% to $692 billion as at July 2024. This is underpinned by the excellent performance of our loan portfolio, which grew by $35 billion or 13.5% and now stands at $292 billion. And this is net of credit allowances for credit losses. We also highlight that deposits from our clients increased by $27 billion or 6.1% to $472 billion, and this signals our clients' continued confidence in the safety and strength of the Scotia Group. The group's strong financial performance continues to reflect growth across all our business lines, prudent risk management, and efficient management of our operations. We are very proud of some of our key performance indicators, which continue to be best in class. Our cost-to-income ratio, otherwise known as productivity ratio, is 48.7%. Other key performance metrics such as return on assets and earnings per share continue to trend well at 2.7% and 450 cents respectively. Our group is well capitalized with all entities within the group meeting and or exceeding, in all cases exceeding, the regulatory limits. And I'd give an example of the bank, which is at 14.1% as our capital adequacy ratio against a regulatory limit of 10%. We are so proud of our business performance over the last 9 months. And that is particularly because, we acknowledge that the country had a very difficult time this summer as we experienced Hurricane Beryl, and a number of our clients and businesses and communities were really, really negatively impacted by this catastrophic event. However, we are very pleased that Scotia Group was able to continue to provide best-in-class financial solutions to help our clients through this very difficult time. Let me just summarize that we have built our strategy on 4 key pillars. Winning as one team. And in doing this, we invest, the first one is win as one team. And in doing this, we invest in the continued development of our Scotia team members. We create and maintain a very inclusive work environment to allow our employees to thrive and to be their best selves. The second pillar is to make it easy for our clients to do business with us. And in that respect, we continue to innovate with new products and solutions and improve our processes and systems across our business. The third pillar is to deepen relationships with our clients. And we provide relevant solutions across all the 4 core areas of our clients' needs. That is their day-to-day banking, their borrowing needs, their savings and investments needs, and their protection needs. And our fourth pillar, which brings it all together, is to continue to drive sustainable revenue growth. And we do this by accelerating growth in all our core business lines while managing the attendant risk. As we move into our final quarter, I have to say that we remain very optimistic about the future. We know that we can continue to do well because we have a team of very dedicated Scotiabankers who are professionals and who are fully trained, prepared, and well-developed to meet and support the financial services needs of our clients. I'll pause here and invite our team members to give some remarks. Starting with Maurice.
Thank you. Good morning, members of the press and colleagues. As a leading financial group in Jamaica and the region, we are proud of our comprehensive range of banking services designed to support growth and success of businesses. We pay keen attention to the needs of our clients and the emerging trends in the environment, ensuring we're able to respond and to provide the advice and support our clients need to overcome these hurdles. Our main objective is to earn our clients' trust in making Scotiabank their primary bank. We have achieved significant success in this regard and continue to refine and improve on our strategy to be better. Our suite of cash management and payment services, which are hosted on the #1 online for business banking platform in Jamaica, allows our clients to reconcile their cash inflows, manage local and overseas payments, and investments in a seamless manner. Our financing and trade services continue to be a stable source of capital for our clients as they seek to maneuver the working capital challenges and grow capacity to support business expansion. We have seen strong growth in transactional volumes across these services, which are continuously being improved. I will also emphasize that this represents an excellent value for our customers as payments conducted online is a fraction of the cost in branch. Through surveys we have conducted, our clients continue to rate our team and especially our relationship managers highly, citing professionalism, expertise, and understanding of their industry and business. Despite our success, we are not resting as the opportunities are great, and we take our role in driving economic growth seriously. You can be assured that we'll continue to engage with our existing and potential clients in a manner that will support the growth and success of their business as we lay the foundation for another 135 years. Thank you.
Thank you, Morris. And good morning to the press and to my fellow colleagues. I'm extremely proud of the continued strong contribution of Scotia Insurance to the group. Looking year over year, the insurance business revenue stood at $1.7 billion, up 10%. Gross written premiums were up 6%. And our new policy growth was up 22%. And this is really a testament to the work of our team of insurance professionals and our clients' continued confidence in us as their trusted advisor. We are particularly proud of how we're making it easier for our clients to do business with us through our alternate channels. And it's all about convenience and meeting our clients where they are at. Our clients are demonstrating their comfort with buying insurance through our mobile app, and we've seen growth of 177% of applications Q3 over Q2 for Digital Solace. Our Scotia Access clients are engaging with their advisors more and more for advice and solutions through the mobile app and our proprietary digital collaboration platform. We recently launched sales through our contact center channel, so our clients can now engage with licensed agents to purchase Solace and Criticare, which is our critical illness protection plan, over the phone. And just on the service side, just to mention that our clients are able to request their key service transactions through our website, through our contact center, and through some dedicated mailboxes, all at their convenience, never having to come into the branch. To close, I would just mention that none of this is possible without the team at Scotia Insurance, who are dedicated and committed and are bringing their best selves to work every single day. Thank you.
Good morning, everyone. It's difficult to follow, based on what our CEO has said. But as a group treasurer, one of the things that I want to say is that I'm very pleased with the quality and the strength of our balance sheet. All liquidity metrics remain above regulatory and management threshold, and the group continues to focus on liquidity optimization. And that liquidity optimization has definitely benefited the various business lines, leading to growth in earning assets. And just as important as that is a strong quality of this base of earning assets. Similarly, the investing community continues to demonstrate a lot of confidence in Scotiabank, and we're seeing growth in deposits. So going forward, definitely we will continue to pay special attention to the balance sheet and ensure that we continue to optimize liquidity. Thank you.
Morning, everyone. This was another very strong quarter for retail banking. We continue to see very strong demand across all financial solutions, which has reflected in the continued double-digit growth that we've seen for credit cards, mortgages, and our Scotia Plan loans. We continue to work on completing the renewal of our ABM fleet, and to date we have completed 30% of the replacement of our older models, and we plan to complete all the replacements by the end of this year. I'd just like to thank our clients in advance for their patience as we go through this renewal process, as it involves taking each ATM offline for a period of about 5 days. So we will see some disruption in service. And this is really because the size and the dimensions of the new machines versus the old ones are different. So it requires some alteration to our physical location to make these replacements. Now, as we continue to make it easier for our clients to do business with us, during the quarter we would have launched our RTGS service online for our retail clients, and we are in the process of testing and will launch in the current quarter the online wire transfers for our retail clients. We believe these services will help to continue to offer digital solutions for our clients, make it more convenient for them, and we have a very positive outlook for the business during Q4 and going forward, and we look forward to continue to support our clients for every future. Thank you.
Solid performance as at the end of Q3 with reporting net income after tax of $14 billion, up 11% year over year. And what I'd want to highlight from a financial perspective is our conservative approach that we have to our credit loss provisioning model. And as such, from time to time, you may see increases in our provisions for credit losses in keeping with the growth and performance of our loan portfolios. And as Perrin and Morris would have shared earlier, whilst we continue continue to see growth of 18% in our retail portfolio, 5% in our commercial portfolio. We really want to highlight the excellent credit quality of our loan book, with our non-accrual loans representing only 1.6% of our total loans, which is consistently below the industry average. And our accumulated credit loss provisions as at the end of July represents 130% coverage of our non-accrual portfolio. The capital structure of the group remains strong, as Audrey previously indicated as well, with all our entities reporting capital adequacy ratios well above our regulatory limits, as well as our internal risk appetite limits as well. Thank you.
Good morning, members of the media, colleagues. Not dissimilar to the sentiments of my colleagues that went before me, Scotia Investments had a great quarter. We continue to exhibit strong performance as well as continued engagement with clients, both existing as well as new to the business. Our assets under management have grown 12%, or just over 21 billion year over year, again highlighting the investor confidence as well as the returns and results by our investment management team. We've seen corresponding growth in our non-interest revenue, growing 14% as well. Client sentiment continues to improve, as well as our advisory capabilities, as evidenced by growth in transaction volumes, client interactions, as well as client feedback. We're very acutely aware of the voice of our clients and take action in that regard. We focus on our asset management capabilities as a core strength and remain strong with investment management, as evidenced by the #1 ranking of 3 of our funds: the Scotia Premium US Dollar Index Fund, the Scotia Premium Short-Term Fund, both US and J dollar, all ranked #1 vis-a-vis its peers year to date. We've also seen growth in our market share, moving up to now 28%. So as we've heard before, Scotia Investments remains very optimistic about the last quarter, and we intend to close the year strong. Thank you.
Morning, everyone. So they've saved the best for last. At Scotia General Insurance Agency, we're pleased to see the steady performance since we officially launched last February. Our clients have been very supportive and have gravitated towards the products that we've been offering them as they seek to meet their home, auto, and content insurance needs. Year over year, we've seen strong growth in sales and gross written premiums generated. Additionally, we have seen a significant growth in sales on our online platform as our clients have, taken advantage of being able to purchase these products at their convenience. And so we look forward to ending the year very strong. And in fact, we look forward to exponential growth in Scotia General Insurance Agency come next year. Thank you.
Thank you very much to all my panelists. We are open for questions now. You can use the chat or raise your hand. David, I see you. You may go ahead.
Thank you very much. Thank you very much, Jenny. Good morning to the panelists and everybody present. You can all hear me quite well, right? Thanks. I just wanted to confirm first. So, I guess my first question, can be directed towards Perrin. So, you mentioned earlier that, Scotia would have launched RTGS transaction capabilities online in the most recent quarter. It would have taken offline recently, early probably June. It was introduced probably in April or May, but we're back online now. And so you're looking to now add RTGS, wire transfer capabilities or testing in the meantime. Could you give some update in terms of, how the reception has been towards the addition of RTGS so far? And when probably wire transfers might become available for online clients?
Sure. Morning, David. Thanks for the question. So the reception of RTGS services has been, I don't want to use the word overwhelming, but we've seen a very, very, very strong demand from the public to use this service. It has been going very well. Yes, it was offline for a very short period. We resolved the technical issues and it's functioning well now with a very strong demand from the public. For online wires, we're tentatively looking to launch before the end of our fiscal quarter, so most likely towards the end of October or early November. So very, very close by. We're starting testing this week internally with internal stakeholders. We expect to be able to launch to the public within a month and a half to 2 months. So there'll be further communication coming in the media. We will share more information around the specific launch dates, and you can also expect to see a lot more public communication about our RTGS online services as well.
Thanks, Perrin. And just to follow up with you subsequently now, so, last week, Wednesday, and I went to the Content Spring branch and I tried to do a deposit, and all the outside or exterior-facing machines didn't have an available deposit service. Luckily, up the road, someone let me know that, the My Park location was an option to make a deposit. And it have said that, you've done 30% of your refreshing your fleet recently, but otherwise, could you give some context, in terms of the overall cost that is expected to be spent by Scotiabank, on this ATM refresh and, just improving the availability of deposit capabilities at the branches?
So, David, thank you for that question. We won't get into the details of the total spend on the network, but suffice it to say that all our ABMs that we use and that we put on the network are newly purchased, and they're purchased in US dollars, and we have in total close to 300 ABMs across the market, right across Jamaica. We are replacing 58 old machines. As Perrin indicated, we're about halfway, we're 30% of the way there, and we'll conclude the replenishment shortly thereafter. And our fleet is made up of intelligent deposit ABMs as well as regular cash dispensers. So it is a significant investment, and the investment is not only the cost for the purchase of the machines, but to put the infrastructure in and then the ongoing maintenance. So when you look on our operating cost line, between cash in transit and operations of the ABMs, obviously with almost 300 machines, that would be a material amount.
Thank you very much, Henry. We did have apologies from TVJ. They did send a similar question. They had asked about ABMs in Old Harbour and if we had any updates on their performance and what we're going to do. I think your response to David just now would have covered that in terms of updates. All right, we have a question from Al Edwards in the chat. Hi, Deborah. What accounted for the 22% growth in 22% growth in new policy growth?
Thanks for that question, Al. So last year, we would have spent a lot of time focused on training, really strengthening the protection conversation of our insurance professionals. And what we are seeing is a kind of a doubling down, a very intentional conversations happening with our clients, and so we're really able to meet their holistic needs, and that really is what we attribute the 22% growth to. Just being able to go much deeper with our client base to ensure that we're covering off on all of their retirement planning and protection needs.
Thank you for that. David, you can go ahead.
If I could just add before we move on, sorry, David, just to cut you.
Deborah.
But we are focusing on, earning primary client relationships, making sure that we are the primary institution for our clientele. And so we have been very focused. I would have mentioned earlier about our Scotia Access clients. So our insurance advisors now and these clients, they're able to interact with one another virtually and actually to end-to-end consummate whole transactions. So this has also allowed us to really meet the clients where they're at a convenient time to them, So, and that has also led to some of the growth that we're seeing. And we expect that to continue.
Thank you, Deborah. Actually, David, allow me to ask a question from Stephen Jackson. Morning, Stephen. Bank of America is the only bank that takes physical cash to and from Jamaica. What is the impact on US dollar spreads? That's the first question. I'll come to the second one after we answer that one.
Okay, thank you for that question. That was from David?
It was from Stephen Jackson. In
From
fact, let me ask
Stephen?
both of them and then you can
Okay.
respond one at a time. The second one is this the reason that Jamaicans cannot do easy transfers online from PayPal, Apple, Zelle payments to local bank accounts?
No, so that the answer to the second question is they're not related. But let me take the first question. So when we look at the whole business of FX and FX trade, as with all other banking services, it's quite involved. The managing of US dollar cash is particularly expensive because if we don't hold US dollar cash in country, we have to remit excess cash, and that means physically taking the cash out of Jamaica and remitting it to our correspondent bank in the US. So when we think about the whole business of buying and selling FX, there is an operating expense that is built into how we manage the spreads and the cost of buying and selling US, and that's manifested in the spreads because obviously to remit cash overseas is not cheap. There's significant security costs associated with it, and then there's also a price that is built in the receipt of that cash. So that is somewhat built in that buy spread rate that you'll see published. The question about PayPal?
So that was a question. Bank of America is the only bank that takes physical cash. What is the impact on US dollar spreads? And
Right.
you have now mentioned the inherent cost
Right,
of
and
moving
the
cash.
PayPal thing is unrelated to the cash, the cost of remitting cash.
Okay, there was a follow-up question to say, is this the most important impediment for the growth of online business or for online business growth? But you're saying it's not related
It's not
at all.
related, no.
Okay. All right. Go ahead, David, and then I'll come back to Al's next question.
Sure, thanks, Jenny. So, my next question, it's kind of have to go to Audrey or any of the other panelists. So, you would have seen Hurricane Beryl's impact, on the South Coast, which was quite devastating. While I do understand that, the Southern Coast is not a major economic hub for most of Jamaica's banks, what was, Scotia's, initial assessment and potential impact that it, recorded within St. Elizabeth, considering that, they're just getting back full electricity in last month, so almost 2 months offline, and the price should have been relatively offline for most of, July, which was your final quarter for the reporting period.
So what's the question?
So
David,
it's about,
so what's the specific
exposure.
question?
So it's about the exposure, the initial impact in a sense with respect to St. Elizabeth and the South Coast of Hurricane Beryl. Like, how have your customers, reached out in terms of, potential forbearance or other arrangements so far?
Okay. Well, operationally, we were able to reopen our branches because all our branches are outfitted with generators. So even though the area may have not had electricity, we were able to function and run the branch very quickly. Now, admittedly, like everyone else, generators were not built to run for months on end or weeks on end. So we did have some challenges in intermittent issues with having to take a generator offline for servicing and so on. But overall, we're able to operate the branch. Now, we do have structures and programs in place to support our clients when there are natural disasters or, any major disruption, for example, COVID, which was the big pandemic, where we do have lending programs that allows our customers to have periods where they're doing interest only or they have a moratorium on payments. And then we also create structures where our customers could reschedule and reorganize and restructure their debts if they need to. We were able to quickly and seamlessly implement those structures because that's part of what's built in our normal business operation. And we had just come out of COVID where we had to do that as well. So the implementation of that was very seamless. We also had to provide support to our staff members because they were also negatively impacted. And again, because of how we manage risk, because of the contingencies that we have in place and the programs that we have in place, we were able to implement that smoothly. So our clients were relatively unaffected, and we don't expect to see any negative impact on the performance of our portfolios coming out of COVID. Out of Beryl.
Thank you, Audrey. I misinterpreted Stephen Jackson's question. So, Stephen, I'm going to ask you to go ahead and ask your question, please.
Hi, can anybody hear me? Morning.
I can hear you. Good morning.
Great. Right. All right. So basically, in 2024, Jamaica still cannot receive the basic online payments that most of the white world, and I assume other parts of the world, can receive as a matter of course. Why is it that we cannot receive US payments into our bank account automatically from PayPal, Zelle, Apple Pay, etc., etc.? What is technically going on? Is it that you guys, as in the banks, are not in discussion with these mega companies? Is it that the mega companies don't want local banks? Is it because of the AML thing? No, we're off the gray list. What is going on? What's going on? I'm asking respectfully.
Yes. I hear the passion.
I'm in this space, right?
Yes.
I cannot receive payments when I sell coffee overseas. I cannot receive it into my local bank account. In 2024, I have to use all kind of different methods to do it. It's crazy.
Okay.
Right? It's the number one impediment for the growth of local micro and small businesses to go international.
I hear the passion. So let me say that today in Jamaica, our international payment system is still built on SWIFT, and we still largely receive and remit international payments via an old payment methodology, which still exists globally, called wire transfers. So in order to receive international payments, largely, we're doing that through the SWIFT program, which is managing that through wire transfers. A number of institutions, including ourselves, we are bringing new payment platforms to the market. Perrin maybe want to talk a little bit about that, but stuff like Apple Pay is coming to the market. But again, it will be within the local market operations. Now, admittedly, Zelle is a platform that is used in the US, and there are a number of banks that are on that platform, and Zelle is being used within the US. Zelle as an international payment system is not yet in Jamaica. There is nothing wrong with Jamaica at a macro level, but what it means is that we have to, there's a process to bring in new international payment systems to the market, and we're just still not there yet. There are some institutions, including ourselves, that will allow wire payments to be done using the online or mobile platform versus completing a wire payment transaction form, but that is also to come. One or two banks have it. We are rolling out ours. We are in pilot right now. It has nothing to do at this point. We are off the FATF grey list, so it's nothing to do with AML or anything like that. It's just a matter of an iterative process to move into new payment systems. And international payment systems are not necessarily the easiest to shift to, because you're going from different banks, and it's not just within your local exchange. There has to be a platform that it can be accommodated on, and most institutions are working to bring that to market.
Can I just get some clarity?
Yes.
Can I get some clarity? Right. So is it that you're saying, because I hear what you're saying, PayPal is still, it's a legacy online payment system, right? But it still has relevance. Why is it that in 2024, when somebody makes a payment on PayPal, that no local bank has seen it advantageous to try to have an affiliate in Jamaica so that when somebody makes $100,000, $20,000, whatever US dollar transfers, it can come directly to your local bank account through an affiliate? Why is that not? Why have you guys not done that? Is it because of the AML in the past? Right? I just can't understand this.
Stephen, it's not singularly about AML, because if you think about it, a wire transfer still has AML considerations. Part of it is just a business decision as to what's the relevant payment system that businesses want to use and what value and cost do the businesses think that that payment platform will bring to the market. We are now looking at international payment systems outside of just traditional wire transfers, and in time those will come to the market. Perrin?
So is it fair to say that you guys are looking at trying to integrate PayPal, Apple Pay into the local market in the
PayPal
short
is a specific platform, and I won't say anything about PayPal. I'm not casting any judgments, but we have not chosen to use PayPal, and other institutions, I don't know what their decision is, but we're looking at other payment platforms.
So, Stephen, just maybe to add a little bit to this as well. So, different entities have to make their services available in specific regions. And typically what they will do is they'll make the decision, form partnerships with different FIs to enter into specific markets. So Apple Pay is a pretty good example. We did launch Garmin Pay. We have done all internal work required to launch Apple Pay, and we have done so in specific markets where the agreements have been finalized with Apple. In Jamaica, for example, we are currently testing Apple Pay. So I have access to Apple Pay with my local Jamaican credit card. I'm able to use it to shop online, to shop in stores. It works. And it is something that we're piloting internally with staff members. But until the formal agreement is reached with Apple to formally launch in country, we're not able to make it available to the public. But what we can say is that we've done all the internal work. Our app does allow for it to work. It works well. And when the time comes, we'll be able to launch it seamlessly, having already gone through testing. The same will happen with Samsung Pay, which will come at a later date as well. And we're currently going through the development to allow for our debit cards to also work on Apple Pay. So I think these are services that you'll see coming hopefully next year, maybe sooner, but it really depends on the providers, whether Apple Pay, Samsung, persons who administer that, to allow for those services to be available in the region. In regards to PayPal, that may be the case as well, where they may have not determined that we would like to enter into this type of arrangement where payments come directly to the region versus having it remain within the U.S. banking partners or other banking partners. But it's not on our part, meaning we don't want to offer those services. That's not the case at all.
And same thing with Cash App, right? Cash App?
That is a U.S.
Stephen, I think the fundamental point is that all of these applications are private applications, and each institution, whether in Jamaica or outside of Jamaica, in terms of those payment platforms, have to make that business decision to want to issue that. It's not just one generic grand thing and you just bring all of them to market.
Okay, understood. But it's the largest growing market in the world, though. But thanks, though.
Can I just add a quick
Hang on, David. Al had a question before. All right, so Al had a question. Sabrina, since you came on board, I note an uptick in your division. Why do you think more investors are turning to Scotia Investments? And when do you see equities making a sustained rebound?
Well, Al, thanks so much for that compliment. I cannot take credit. Scotia is an amazing brand. We have a great team at Scotia Investments and throughout the wider group. So a lot of that progress and productivity is in regards to their work effort. I'm happy to be at the helm and to be guiding the company as we progress on our strategy going forward. We continue to invest in our team members to improve that conversation and the value-added services from an advisory point of view. We've also benefited from improved client sentiment in the market and great results from our asset management team, which is really, so it's not any one solution why we're seeing that uptick. It's really an aggregation of a lot of initiatives all coming together, and we are seeing that improved results. So thanks for recognizing that, and I'll ensure to pass that on to the wider team. With regards to equities, we've seen interest rates come off a quarter point, and as with the rest of the world, we do anticipate seeing some more reductions in interest rates, and we're seeing it in our BOJ CD auctions as well. Equities will naturally, or should naturally, have a pickup as the fixed income interest rates come down. There should be a natural movement towards equity as our investors move towards higher returns and yields. As far as timing, we'll have to wait and see, but that's the way the macroeconomics work, right?
Thank you so much, Sabrina. Al, my apologies. You had asked questions earlier that I had not seen. So let me just ask one of them and then I'll go to David. Hi, Audrey. A couple of years ago, your mortgage book grew by 14%. Now it's up 25% in a constrictive environment with higher interest rates. How did you pull that off?
Well, let me just say, as Sabrina would say, I would not take the credit. We have a big man next to me, head of retail, Perrin Gale, and we have 28 branches, right, across the island. We have a team of well-trained professionals. We decided a few years ago that mortgage or home ownership is important to every Jamaican. And so our decision was to help Jamaicans to realize that dream. And so we trained the staff, we built up a mortgage process that was robust, including the risk assessment process, and we then moved forward to really deliver that product to our clients. Now, bear in mind, we have almost 750,000 customers in our portfolio. We have been around for a long time, so we have very deep relationships. So in focusing on that primary need of our client and having the balance sheet to support it, where we could offer mortgages at a rate that our clients find attractive, using a process that is simple and straightforward, and having the risk management tools and framework to make the assessment, to make sure that when we assess a client for a mortgage, that client should be able to meet that obligation. So it was a number of elements that came together, and we're seeing that really delivering solid results for the bank, but even more important for us, we're helping thousands of clients to meet that goal of home ownership. And when we talk about deepening the relationships with our clients, you can't get deeper than helping somebody to get into their home and then managing their payroll with them, and providing a safe environment for them to save and to invest, and then provide the insurance and the protection that they need. So it was really around a strategic approach to making sure that we're meeting those core financial services needs of our clients, and we just continue to build from strength to strength.
Thank you, Audrey. David, you can go ahead with your question now, please.
So earlier, Perry, you mentioned Apple Pay and Samsung Pay. Is that similar extended to Google Pay as well, in terms of that potential relationship in the future?
It's not Google, it's only Apple.
No, I think it's only. So currently what we're working on now is only Apple, but the comment kind of touches on most entities. They decide which markets they want to operate in. The FIs would typically work with them as they go through a development period to make sure that our apps or online services can tie into the various platforms. So there's a lot of work being done because we are an international bank. So we do provide these services in other territories where it is available. And once it becomes available in Jamaica, because that work is already done, we'll be able to offer that to the public. But it's really that arrangement or agreement with the other partners that determine what that timeline may be. But we are working to provide those services once they become available in our region.
So the reason why I asked that is because, for example, at Dummer Cayman, there are other options like Google Pay or Samsung Pay. You mentioned Samsung Pay earlier, but I appreciate the clarity though, Perrin. So it's just wait and see as to when some of these other features become available in Jamaica then.
Yes.
Understood. Thanks.
Thank you, David.
And then
Sorry.
just one more question before I'll go to Al.
Sure.
So I'm just going to Audrey basically. So when I look back at Scotia, Group Jamaica's numbers, looking at a quarter by quarter basis of loan growth, we would have seen in Q1, loan growth of about $6.9 billion, $6.6 billion in Q2, and in Q3 about $9.36 billion in loan growth. This is also accounting for, expected credit losses. And based on my general research, Scotiabank, Jamaica in particular, is one of the cheapest lenders in the market right now. The first question is, do you expect, to continue to grow at these breakneck speeds, especially with, rate having to come down? And the second question, is really on the reaction, in a sense, towards the BOJ's first rate cut, and we think it was quite timely when they did it.
So let me take the first question first. When we look at how we position ourselves in the market, obviously there are a number of things that come into play. And Adrian spoke about that. First of all, when you're a bank, you have to have the balance sheet to support your growth. So we have ticked that box. We have a strong balance sheet that's well managed, and we can support the growth. The other thing we have to look at is, where are the clients? What's happening in the market? What are the, all the exogenous factors, and how will those factors impact us? Assuming the economy continues to do well, assuming that people continue to be employed, yes, we'll continue to grow. So if that happens, we check that other box. The third thing is, we fund our own business, so we check that box, and that's part of what we have been able to manage the pricing, because we don't necessarily need to borrow money to then on-lend to our clients. So we check that box as well. But as I said, more importantly for us really is around strategy. Let me just step back a little bit to say that at the start of the year, when Scotiabank spoke about its global strategy and how what's the area of focus for Scotiabank, the global bank, because remember, we are part of a global entity, that it was Canada, US, Mexico, and the Caribbean. And Jamaica is an important part of the Caribbean. We have been in Jamaica the longest in Scotiabank in terms of a Caribbean presence. We were the first country outside of North America that Scotiabank opened its doors. So when Scotia and the head of Scotiabank speaks about the Caribbean as a core area for Scotiabank to focus on, it means that we interpret that, and what the market should read from that is that there will continue to be investments in the Caribbean, and that there's an expectation of sustainable revenue growth and strong financial performance in the Caribbean. So to answer your question, when we look at our 5-year plan, growth is part of it. And when we think about growth, we think about growth from the client's perspective. We know that we offer a very strong, competitive, viable option for Jamaicans. So we expect that, as we have seen over the last 135 years, Jamaicans will still continue to overwhelmingly choose Scotiabank. And we have the products, we have the services, we have the pricing, we have the professional expertise to continue to meet those needs for our clients. So I suppose, in short, the answer is yes, based on strategically how we are positioned. What is the global outlook for Scotiabank? The expectation is that we'll continue to grow the business here, and that we'll continue to deliver value for our clients.
Thank you, Audrey. So we had another question from Al Edwards. How constraining was the interest rate regime on this performance? With the BOJ reducing the policy rate by 25 basis points, how do you see the next quarter and future ahead for 2025? The question is for you, Audrey.
Well, what I would say is, and we admit it, the last, I would say, 2 years have been difficult, because once you get into a high interest rate regime, it becomes a very difficult situation to manage, and depends on where you are when the rates start to climb can determine the impact it will have on you. We have managed well through this environment. We have no issues with the central bank and their monetary policy application. Whatever the environment that is created, whatever hand we're dealt, we work with that hand. We recognize that the monetary policy application that we saw in Jamaica was not unique to Jamaica. Right across the globe, all central banks were using monetary policy tools to try to contain inflation. The good thing is the BOJ came out of the blocks pretty early, right, and started to make their adjustments. And now, after a few quarters, being within that range of that 4 to 6% inflation range, they're now pulling back, and I think they're going to work through what I'd like to think is a soft landing as they pull the rates back. Again, Scotiabank, whatever the environment is, we will deploy and execute on a strategy that will allow us to operate successfully and to deliver strong, solid financial results within the market. So we can manage, as long as, at a macroeconomic level, the country is performing as it is, we can manage through the various scenarios. We do, and as Adrian, our treasurer, we do quite a bit of scenario planning, and we look ahead, and then we take the actions that we need to take to ensure that we can deliver for our shareholders, and also importantly, deliver value to our clients through the products that we offer.
Thank you, Audrey. Al, you had a question about the payment apps. Was it answered, or should I go ahead and pose a question? Not hearing you, Al? Should I go ahead?
Yes, go ahead.
Okay, so as a follow-up to the conversation about the payment apps, Al was asking, don't you think all these payment apps would be a headache for a conservative institution like Scotia? With scamming on the rise, would it not cause damage to the brand?
Well, Al, you couldn't have said it better. Now, the truth is that
Al, you're on mute. We're not hearing you. You want to say something?
You're still on mute.
Can you hear me?
Yes.
You don't want scammers, terrorists, dodgy characters, all kind of nefarious Mickey Mouse people coming out, and it's just going to be a stain, a blotch on a conservative financial institution. It was one of the big worries in the States. We're going to see the rise of sectionalism across the world, people transporting money, you don't know where it's coming from. Then you got AML to consider. It's a headache. That's what I think. I don't know. What do you think?
Yeah, no, I mean, you couldn't have said it better.
I'm putting it out. That's what I'm saying. Straight.
Yeah, so we are always mindful of how we manage the inherent risk.
The brand.
Right, the inherent risk in the business and how we manage the brand. So Perrin was very specific. Perrin mentioned Apple Pay as one of the options we're looking at. And so we also have to think about it from a business viability standpoint. There's no need to have 10, 12 different payment apps that we're offering to the market, because essentially what clients want to do is they want to make payments and receive payments. And if we have one or two robust payment partners that we can work with, then that is always going to be our preference. So, Al, you couldn't have said it better. You're not going to see us coming with a litany of every payment app that is out there, because one, there's a cost to the business to establish that, and two, we have to consider the cyber issues, related issues, and so on, and we have to make a full risk assessment on every single application that we bring to market. So from a business viability standpoint, it wouldn't even make sense for us to do that. But we will continue to bring meaningful, robust, fairly safe and well-known applications to the market that we think can add value to our clients. And I just want to remind, Stephen, that there are two sides to payments. There's the making of the payment and the receiving of the payment. And typically we go through in an iterative way. So we'll start with allowing our clients to make payments. And then we will also then look at can we receive payments electronically through that international payment platform.
Can I just jump in here and say something?
Yes.
Okay, over the last couple of years, we've had a few situations, stocks and securities, the NCB, a couple of them. We need a period of just calm, safety. I don't think we need to enter swamps at this particular time, because it would be deleterious to the entire sector. Not just particular institution, but we have to go through a period where we can recover from what happened before. And I don't think we should invite scenarios which is going to be harmful to the country's financial institutions by letting in third parties that you can't effectively monitor. But what do you think?
Agreed. Al, and the other members online, that when you have an institution like Scotiabank that over 135 years, just think about it, can maintain that institution in a foreign country as Scotiabank for 135 years without ever having closed those doors or without ever having had any bailout or any balance sheet issues or any financial sector crisis issue that impacts the operation. It speaks to the strength of that institution. That is what we have in Scotiabank. And we take risk management very, very seriously. And risk management for us is not just credit risk management. It's operations risk, liquidity risk, interest rate risk. We take all the reputational risk. We take all levels of risk seriously, and it is our intention. We have a mantra that says, for every future. And our vision is to continue to be the most trusted organization that our clients do business with. And so that is the framework within which we make decisions, within which we execute products, within which we bring new products to the market, within which we hire people. And that's the framework on which we do business. And we feel that we have been able to contribute significantly to the Jamaican economy because of the stance that we have taken as an institution. So, your point is well taken, and we support it. Adrian and Perry, I heard them. So if you guys want to add anything.
I want to just make a plug for our e-commerce services, right? Stephen mentioned having payments in the PayPal and unable to move it here. And I just want to highlight that we do have Scotia e-commerce, right, which we have within that 3 options: full website execution. We have an option where we can host the page, or we have the virtual terminal option, which we can use a link for you to collect those payments, and those payments are settled into your local bank account on a daily basis. So that's an option that is available. We have been deploying it, and it has been, many customers have adopted and are very happy with the solution. So, we point you to those solutions that are available locally. Thanks.
Thank you, Maurice. I know we're over time. I'm going to try and just get in the last few questions. Scotia's NPLs are $4.8 billion, up $500 million year on year. What is the size of the past due loans and growth year on year? We have some other questions. You want me to come back?
Could you repeat the question?
Sure. NPLs are 4.8 billion, up
Correct.
500 million year over year.
Correct.
What is the size of the past due loans, so the actual past due loans, and the growth of the past due loans year over year?
Correct. So the NALs, thank you for that question. The NALs actually represent the past due loans. And those are the loans which are past due for 90 days or more. So that 4.8 billion actually represents the past due loans.
And so I think, Gabrielle, you had spoken about just the high quality of the
Correct.
credit.
So notwithstanding
specifically about
the
the
significant growth that we have seen in our loan book, the NALs only represent 1.6% of our total loan book as at the end of July. And this consistently is below our industry average. And as Audrey said, we manage risk very well. It's one of our core areas of expertise. And we continue to ensure that the quality of our loan book remains very, very strong.
For clarification, Stephen, what about the 30 to 60 days past due loans?
No, those would not be in the NAL because so I don't have that exact number at this point in time. But there's no concern as we typically track once it is 90 days past due.
Yeah, I think the overall point, though, is that when you look at the quality of the credit book, it is very sound. And if you look at it in the perspective of just how much we've grown, and especially looking at mortgages, 25% growth in mortgages, and these tend to be the longer dated assets that we're putting on the book, to have the quality of the credit book remain that sound, I think it speaks volumes about our process of booking these loans, and just the quality of our clients.
And what I would say is what we usually look at those 0 to 90 days through our collections process. And one of the things we are very proud of is that coming out of COVID, we were able to apply new risk models. So our post-COVID experience, our delinquency experience is significantly better than before, and there are no major increases in the 0 to 90-day book of business on all the portfolios. As a matter of fact, at the commercial level, there is, I'd like to talk about commercial, that there are just no issues there, and sometimes people say you leave too much on the table. And then small business, we're seeing good trends and reduction in the delinquency there. And then on the retail book of business, delinquency is very well managed and certainly within our risk appetite and tolerance levels that we have set. And also, we have a robust collection framework. And in that framework, we're able to deploy different tools to support our customers to manage through any changes in their personal or business circumstances.
Thank you. I know we're a bit over time. I'm going to I think there's 2 more questions. So Al had said Scotia has managed well over the last 2 years. However, both the BOJ and the PIOJ are forecasting anemic growth going forward. How then can you grow the business?
Well, the obvious one is we can take business from our competitors, as I said. We are very viable and always have been one of the first options for the average Jamaican, and we welcome that business. So, in periods where there is not economic expansion, then we would work through capturing market share and taking business from within the existing market. Now, the great thing is that we are a financial services group, so we have offerings for every single area that clients have financial services needs. So part of what we are focused on as well is what we call our client primacy, which falls under that pillar of deepening our clients' relationships. So we want to make sure that as we look at our clients across their day-to-day banking needs, their needs to borrow, to acquire assets, their needs for investment, and their needs for insurance and protection, that we are meeting all 4 needs. And that's not just for retail clients, but small business as well as corporate and commercial clients. So even just within our own client base, there's still a lot of growth opportunities. And then, of course, we're going to take market share.
And if I could just add, Audrey, so the question really was, it said Scotia's been doing well over the past 2 years. And I mean, I'd like to comment on that to say we've been around for 135. So much longer than 2 years is for how long we've been performing well. But just to pivot back to the statement about growth in GDP, that growth in GDP really represents baseline, because if you look at it, we've produced 11% growth in our earnings. So it pivots right back to your statement, what you said, Audrey. We will and we can grow in spite of where the economy is. We definitely need the economy to grow to boost overall performance, but definitely the growth in the economy really represents baseline, and Scotiabank can do more than that. Again, by doing, as you said, taking business from the competition or just looking for business where it exists.
All right, can I just jump in there? Adrian?
Okay, I think this is going to have to be our
Hello?
final one. Go ahead, Al.
Yeah,
Any other
no,
questions?
it's not
We
a
will
question. It's just I wanted to put it into context. This is post-COVID, elevated interest rates. That's what I meant over the last 2 years. You know? Just the different challenges that face the entire sector. It's just, contending with that. That's the context in which I
Okay.
meant over the last 2 years.
Okay.
Got you.
We navigated it pretty well.
Yeah, and I mean, that ties right back to balance sheet management, and ensuring that we've positioned that balance sheet so that we can have our business grow. And that's literally what you're seeing now.
I see.
Yanni, can I just get a quick question, two questions in, because I've just been on the silence for a little bit.
There's actually one that was ahead of you, David, and I think we may have to wrap it, but we will answer any questions that are sent to us. Stephen Jackson had asked a question before, Audrey, regarding your tenure. In the past, Scotiabank has had presidents for around 3-year periods. You're beyond that period now, and has your tenure been extended based on your performance?
Stephen, you really want to take out of the little work? Well, part of it is that we because we're a global bank, sometimes we do have expatriates as the head of the bank, and so that's where you'd find more of a harder line on tenure. But so far, I've been in this role now 3 years, and for as long as the bank will have me, I'll happily serve. So I can't comment other than that.
All right, colleagues, do we have the time for 2 more? Okay, with 2 more, and then we'll cut it off. Stephen says you have done very well in a most trying time.
Thank you,
Well
Stephen.
done. Okay, David, go ahead with the last 2, and then we'll close.
All right, thanks. So, Sabrina, can you give some clarity? You said you have a 20% market share earlier. Was that with respect to assets under management in the market, or was it with respect to unit trusts in the market?
Unit trust, collective investment schemes.
Thanks. And then the additional question is, I believe this can go to Gabriel O'Connor. Yes, that's correct. So, the Bank of Nova Scotia Jamaica has seen a significant increase in its capital adequacy over the last 3 quarters, from like 13% to 14%. No, it have only done one retained earnings reserve addition of $2 billion in Q1. What's driving the significant improvement in the capital adequacy? Is it a reduction in the risk-weighted assets, and also is it more so towards, and what's the status on Basel III updates for Scotia then?
Okay, thank you for that question, David. I'll start with the latter question first. So the central bank would have advised that we will continue to report under parallel reporting until further advised, and they are looking to put the legislative framework in place. And once that has been completed, we will then transition officially to Basel III. So we continue to report, and we have no concerns either under the Basel I capital adequacy framework or the new Basel III capital adequacy framework. Coming out of our transfer, as you mentioned earlier in the year, as well, we have seen in terms of our risk-weighted assets, there has been a reduction based on classifications, and of course, in terms of we use a standard classification now in terms of a fixed percentage applied to certain categories of assets, and that reduction has resulted in an increase in the capital adequacy ratio that we're noting now for the bank.
Thank you very much, Gabrielle, and I think this is where we close. Or I don't know if you have any final words, or if we just end here.
Yeah, but let me just thank the media for coming out. And as I said at the beginning, we are always very happy to have this frank discussion with the media to talk about the bank and the group. More specifically, let me just make sure I say group to talk about the performance of the group. You know, we want to thank our team of Scotiabankers, persons who are not present here, who have just done an amazing job in working with our clients. And we want to thank our clients for their continued confidence in us as an organization. And we want to thank our board of directors for their guidance, and also our international bank for continuing to make this investment in Jamaica, which really has just added a lot of benefit to our country. What we'd like to say is that we continue to remain very disciplined on executing on our strategy. We remain true to the organization who we are, which is an organization that is built on a solid framework, that we deploy very strong risk management tools and policies to guide the business. We focus a lot on our clients' needs. We have invested in technology to help us to get feedback consistently from our clients, and we act on them. And we proactively think about what we think clients will need for the future, and we plan and execute on those. We are very diligent in executing on our strategy, which is built on a strong team who is willing to win together, focus on making it very easy for our clients to do business with us by opening up multiple channels for them to do business, deepening our client relationships and focusing on being that primary bank for our clients, and then, of course, continuing to grow our core business lines to deliver value for our shareholders. So thank you so much for coming. We appreciate your time.
Thank you, everyone. It's been a robust, enjoyable discussion this morning. If you had any further questions, please let me know, and we will send out the media clips to those who need it. This is the footage from this morning to those who need it. Thanks so much for joining, and we will see you next quarter. Bye-bye.